Welcome back to the watch list. We're talking earnings, convenience stores, Casey's General Stores. Reported its quarterly numbers, revenue growth in the report before the market opened today. We've seen it moving back and forth because it's got a little pop, then a drop. Right now it is to the downside. Our panel is ready. Sam Burns, founder, chief strategist at Mill Street Research, and Lee Bohl, CMT senior manager, trader education at Charles Schwab. Good to see you both. Sam, what was your interpretation here? Right now, we're seeing it down about 0.5%. RBC has a sector perform, has a 296 target. It's at 271. Your thoughts? They called the results solid.
Yeah, that's been kind of my impression, is that the results for the quarter were good. They beat earnings expectations pretty solidly by about 13%, and revenues were roughly in line with consensus. I think it's another matter of what we've seen a lot of this quarter, this third quarter earnings reporting season, where the numbers reported have been pretty good, but the forward guidance has been sort of less inspiring, and the numbers were already up enough to generate less of an upside surprise in terms of the forward guidance. So my guess is that's what we're seeing in the stock today. The good news this morning kind of got deflated a little bit as people kind of consider all the details. But the overall trend still looks pretty good in my work. It looks like estimates are still rising. The stock's been a good performer this year, so it still ranks pretty well in my work.
Yeah, and they kept the quarterly dividend. They had the repurchase authorization. They're buying back 30 million shares. What did you, at least, let's see, expects to repurchase at least 100 million of shares throughout fiscal year 2024. Lee, what stood out to you?
What stood out to me was their take on the consumer, which I found very interesting. They said that their lower end consumer, and in their market, they consider, because they're such low cost areas, that their regular consumer is $50,000 in income or more. Their lower consumer is a big shift happening in the tobacco area. And this leads to two different things we should consider. The first is it's not hurting them too badly that the lower demographic consumer is not buying as many cigarettes, and the cigarettes they're buying are of lower quality brands. But what they are finding is those same lower demographic customers are buying more of their private label goods as opposed to their grocery goods, and their private label goods has a much higher margin than almost every product they sell. So it's really helping their margins going forward on that. The other thing is that as far as their expansion plans goes, they made a big point of a lot of the independent convenience store owners get a big portion of their revenues from cigarette sales. And since that's in a secular decline, that could offer them an opportunity to buy some of them, as they expand. They just expanded in 22 stores in Texas just this quarter, too.
I see. Okay. So what say you, Sam, about the actions that we're seeing from the customers? I mean, they're buying more private labels, so they are spending, but they're being more careful. What do you think about how customers will behave? Because that's a technical for not only Casey's store, but also for many stores.
Oh, you're right. I think it is part of a general pattern of consumers kind of deciding more carefully, what to spend money on and where, and particularly in things like, grocery and convenience stores and things like that, where we've seen, people trying to scale back a little bit and respond to higher prices in one way or another. And so I think that is part of an overall pattern, and that there's more spending on services now, people going out and doing things rather than things bought at a store. It sounds like, Casey's is holding up well, particularly, with their gasoline margins, and then the shift to private label where they have higher margins. So it sounds like they're managing it well, but I think it is going to be part of a pattern going into next year, potentially, that the consumer will still have money to spend, but will be a little more choosy about how it spends it.
Yeah. Gasoline obviously has that competition. That's something that you both noted. What about the labor force, Lee? That's something you had in your negative list.
Right. Convenience stores historically have very high turnover, obviously, but they said actually that their workforce management on the conference call picked up a little bit in the sense that it is not cutting into as much as their expenses. And they said they've had lower turnover rates than usual. And also what they've been doing is taking some activities which had been done in the store and putting them in a central location so they don't need as much overtime, which is helping. But in general, you're right, Nicole, the turnover is still an issue for them. And they still have a very large training budget as they take more people in.
Thank you both so very much. Sam Burns, Mill Street Research, Lee Bohl, Charles Schwab. Thank you. A good look there at Casey's and consumer behavior as well.